It's always hard to predict short-term variations in the market. What we see, though, is kind of a very strong, sustained trend in growth and technology investment. Really driven by the fact that it drives massive productivity increases. So that trend has existed for 10 years. Everything we see, all the data we see within our portfolio companies when we talk to CIOs, is that that trend is likely to continue unabated for at least the next decade. Now, could there be variations in the market? Could multiples re-rate for periods of time as they have in the past? Entirely possible, but we feel really good about the long-term secular trends.
Being somebody who's actually pretty good at this, wouldn't you be relieved to see some people get out of this business and you have less competition for the best companies?
Sure. The reality is our business is one where funds are very long-term in nature. They have 10-year commitments, so it takes a long time to go out of business in the venture capital. It's a lot easier to go out of business than regular business than venture capital. So it's unlikely that we'll continue to have competition as we have had historically. I expect we'll continue to have it going forward.
You had 3 companies go public. Congratulations. Nobody wants to go public anymore, it seems. Tell me about what the discussions are like behind closed doors when you're talking about exit strategies. If you look at the number of publicly traded equities in the world, they are down 50% from their peak. The public markets just don't seem as attractive as they used to be.
Yeah, there's a couple of things. One, if you talked about the $35 billion of IPOs, but if you actually look at that on a historical continuum and you go back to 99 or 2000, while that's a short-term peak, it's not a long-term, it's not close to a peak. So IPO volume, long-term IPO volume, even in technology, is actually down, even though this year has been a good year. But the answer to your more direct question is the markets have changed. So first hit the private capital markets. You have a much larger pool of private capital that's basically allowing companies to stay private significantly longer. So you're seeing companies like Uber and Airbnb, who in a different market would be going public, using those private markets to be able to continue to invest in growth, provide liquidity to shareholders. That wasn't really an option 5 or 10 years ago. So that's a difference on the public markets. I'm sorry, in the private markets. In the public markets, there's just been a radical shift in the types of investors that buy in these IPOs. And if you look at the list of the top 10 investors in lots of IPOs 10 years ago, you'd have recognized all of them. Today, less so. And I think there's a lot of fear on the part of CEOs that once they go from being a private company to a public company, that there's a lot of short-term focus on obviously results. And that creates hesitation on the part of some CEOs to go public. But the flip side is, over time, you need a liquidity strategy, certainly for investors and employees, but it also is a valuable currency, both to be able to potentially do M&A or be able to raise additional capital. So I think the IPO market will continue to be there. Whether it'll be there in the same scale as it was 10 years ago is something we could debate.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.